introduction, and then just a quick bio, and then I'll ask you the first question.
Okay.
So, my name's Mike Lewis. I'm a trader, and I'm talking here with Bob Pardo. Hi, Bob.
Hi, Mike.
Bob has an impressive bio. His career spans over 35 years. He's been a hedge fund manager, award-winning trader, strategy designer, consultant, software pioneer, and author. He wrote the Evaluation and Optimization of Trading Strategies in 2010, and it's still considered to be a trading classic today. He designed the exceptional XT99 trading strategy and traded this with in a joint venture with Dunn Capital Management. The exceptional performance of XT99 consistently achieved top performance citations from for CTAs. He has been cited more than 35 times in top trading categories and has won multiple honors. In a 2008 Futures magazine, he was featured as one of the top traders. And Bob's latest creation is Pardo Renaissance Diversified. Renaissance is a state-of-the-art, highly diversified algorithmic trading program. Its pro forma returns an AR of 29.98% and a Sharpe ratio of 2.5, exceeded that of XT99 and hold tremendous promise. So that's a quick rundown just to establish that you know what you're talking about, Bob. If I can ask you the first question, which is very simply, can you say what's your process for designing a trading strategy and how do you do it? I know it encompasses a lot. A quick summary of your approach to it and how people can emulate that.
Okay, well, I have an advantage in this, in that I really have a very deep bench of strategies that I know have been proven in the past. But when I build strategies, and I still create new ideas and new trading strategies. I get an idea. Let's say I want to play with I want to do a mean reverting strategy, and we're going to buy, X number of our dips. So I get the basic idea. I usually think it through from the point of view of, does it really make any sense? I'll look at some of the. Sometimes I'll create like a show me or something like that, and look at it on a chart and see whether or not it's actually doing what it is I think it's what I want it to do. And then once I know that I really basically have the idea well defined, then I'll put it into a strategy form, and I'll look at a couple of the key variables and see whether or not they are in fact key. Then if it looks, and then I'll run some rough optimizations. Usually I look at it over like a basket of seven different markets. Pretty diversified. I call it a mini portfolio. And then if it looks good, then I run a more exhaustive walk forward optimization using the cluster analysis feature in TradeStation, or in other programs we can just run a matrix of walk forwards. And the first round is get it right. Second round is it actually worth? Does it have any legs? The third round is crude robustness testing, and then if it passes all that, then we put it through its final rounds, which means we run it through our full portfolio, and sometimes different time frames of different hourly bars, daily bars, 3-hour bars, 5-minute bars, and then generally what I found is that most strategies really don't work in every market, or they'll work better in some than others. And I don't have a problem with that. But I have a problem with a strategy, for example, that if I test it on 40 markets and it only works in one, that's something like weird, like orange juice. I have a problem. I think that's probably that's really kind of a false start. So and usually when we get to this final round, we know we have something robust. So we're really looking to get a portfolio of strategies for different markets at that point.
Okay, well, that's brilliantly put. I mean, that's very succinct. So just to clarify, that you actually invented walk forward optimization. You developed the software, the coding, and the software that really runs the TradeStation program of optimization, didn't you?
No, I didn't write that program. Somebody else wrote it. But what we did is I used to sell years ago when I was in software. We used to sell programs that are actually kind of like an analog of what Ranger is now. Would basically be a basic trading idea embedded in a program where we could add all kinds of filters, stops, and so forth. And we built into that. We built in our walk forward analysis method, and we did that like in the early 90s. And the walk forward optimizer on TradeStation is okay, but it does. Nobody's ever done walk forward analysis the way we ever did. So I guess it's one of these days we'll have to get back to that. But there's, even though I consider a walk forward analysis to be some people call it the gold standard, and I would agree with that. I would never trade anything that wouldn't pass a walk forward analysis. I've seen too much. So I would never trade anything that wouldn't pass a walk forward analysis. But even with the walk forward analysis, you can still, if you want to fool yourself, you can still fool yourself, and you can fool yourself with a walk forward analysis also. So you have to be. I don't particularly feel that one walk forward. I mean, some people feel, for example, that doing one simple walk forward, take 10 years, optimize it, run it for 2 years, and it passes is enough. I don't. I've never thought that was the case. That's why.
So what
walk forward analysis
do you do with your walk forward analysis? I know you take sort of clusters and you run it from different times. Do you anchor it or do you not anchor it? What approach do you use?
I don't anchor it. An anchored walk forward is actually almost a contradiction in terms. I don't know why they ever thought of it. The people. One of the things the people had done actually did that, and for the life of me I couldn't. They effectively did an anchored walk forward, and but I think it defeats the purpose of a walk forward analysis, because there's two real benefits to walk forward analysis. The one is that if it passes it and it passes it with high marks, then you've got something very robust. But the other benefit there's a third benefit also. But the second benefit is that it makes it it's more responsive to change. So if you're looking at an anchored window for your optimization, all you're ever doing is you're adding a little bit of data to the end and seeing if that passes too. And I don't think that's really the whole point. But the benefit really is that it's a walk forward analysis is much more responsive to market changes, because especially if you use a short window.
Yeah.
And so anyway, yes.
So
what I do with TradeStation is I don't believe one walk forward is enough. So I do the cluster analysis, and I do it, and I turn off almost all the switches in there, because I think it doesn't really work. It doesn't. I'm a better judge of a walk forward analysis than I think TradeStation is. So I turn off all the switches basically, and I just want to see that it basically it's profitable in the majority of walk forwards. And then I do a final test where I run it through a matrix of walk forwards that I'm very comfortable with, because I run it through that matrix, and it has to pass virtually